Hi everyone, good morning, good afternoon.
Hello, everyone. Thank you for joining us today. We bring you another of Crystal's famous webinars featuring Nick Smart. I'm going to start right off the bat because this webinar will be made available as a recording. So if you've joined late or you can't stay the entire time, it will be available for you to view in your own time. So today our topic is navigating crypto risk in the Gulf. I'm Nicolette Brown. I'm the Director of Content here at Crystal, and I'm very thrilled to be joined by our Chief Intelligence Officer, Nick Smart. As mentioned, we'll be diving into Crystal's latest report on crypto regulation and risk in the MENA region, and we'll explore some of the broader trends which affect compliance, enforcement, and digital asset security. Before we get started, we're going to run some polls today. It might be a little bit soon to get one going at 1 minute past the hour, but if you could please let us know which area of focus you are in, that would be great. It would help us understand if we're talking to the right people. We'll be running a few polls throughout, so please do chip in and add your opinion and cast your vote where you can. On that note, also pop any questions that you have into the chat, and we will find some time at the end of the session to answer some of these. And finally, before we get cracking, some housekeeping rules. Please ensure all your audio and video is off. If you have any AI note takers, which I haven't seen any pop up, please disable those. And as I said right at the beginning, we will distribute the recording in the coming days. So if you do need to pop off, which I'm sure you won't, feel relieved that you will get a recording. So Nick, let's get on with it. Would you like to give yourself a little introduction before we get started, just so that people feel they know who you are?
Yeah, sure, I can do a very quick spiel. I'm sure some of you already spoken to or heard from me before. So I'm Nick, I'm the Chief Intelligence Officer at Crystal. My background has been intelligence for the past 20 or so years. I've been with Crystal for about 3.5, and I'm really excited to sort of share some of the insights and information that we've been able to learn as a company and as a research team over the past sort of 3 years regarding the Middle East. I think we have some pretty unique insights as a group, and I'm really hoping that you guys find this useful.
Brilliant. Thanks, Nick. Okay, so about this report, what was the original motivation behind it?
Maybe talk about the history of the reports, and I think like we do have like a history here. So one of the things that we've noticed, or we did notice a couple of years back, was that the discussions around cryptocurrency adoption and use typically focus on a English-speaking North American, Western European audience. But we know that cryptocurrency is an international, local product as well as a global one. So what does it look like in these other countries? And one day, we were working with one of my colleagues, and we had a request from a financial intelligence unit, and they asked us, like, phrase straight up, is like, well, we want to know a bit more about how cryptocurrency is really being used in our country. Like, we've seen some data, but we want to know a bit more. Like, what does it look like on the ground? So we started to dig, and we started to look into the information that we could come across about where cryptocurrency is being bought and sold, who's buying it, why they're buying it, where they're discussing it, and really trying to get into the weeds of, what is cryptocurrency being used for. And that's sort of given us some pretty unique and developed insights. Whereas we have had, in the past produced geography of transaction reports, which tend to look more exclusively at on-chain data. Most of us will know that on-chain data is only half of the discussion. You also need to have a look at the off-chain data as well to understand, what the landscape looks like. And that's not just around cryptocurrency like being used for positive things, it's also for illegal things and risks too. It has a different flavor in every country you go to. So we very much look into things in that sort of like high level of detail and depth. And that's sort of what yielded us this product, the country reports. And we'll also even launch from our website now. You can download the regional guide, which we now have. Obviously, just put your email in there and you can get a copy of it and read it. And we have additional documents in more specific areas, which you can have a discussion with us about if you need any more specific information.
Yeah, okay, great. Nick, we can talk about the documentation that is available and make some links available at the end of the webinar as well and in follow-up emails. But for today, why did we focus on these 6 countries in particular?
So when we look at the region of the Gulf and more broadly the MENA region, there are lots of drivers behind why it's got adoption with cryptocurrency, or why does cryptocurrency sort of like thrive in some areas? And there are some discussions around like regulatory clarity for something like perhaps the UAE, also things like, but there are also some more social things perhaps that have driven adoption rather than specific, regulatory requirements. So one of the things that stands out about the region, particularly in the GCC, is there are really high numbers of expat workers and also lots of international commerce, right, that takes place here. We've got manufacturers from South Asia or East Asia who arrive and meet their buyers and their resellers who are selling in Africa, South America, even Europe and North America. So they all come here to sort of do business. And anyone who's been to Dubai will know that there is a steady stream of events for like huge supplier manufacturer events, Gulf Food, Adi Health, GTEx. Like these are huge conferences where lots of people come from all over the world to sort of discuss and negotiate like their supplies for the next sort of 12, 18 months. So it kind of, in my mind, cryptocurrency finds a purpose here because we have one supplier, one seller, and they want to interact with each other. They don't necessarily want local currency on either side. They need to find something common. Typically, that's been US dollars or perhaps in other cases, sterlings or euros. But increasingly, what we're finding is that they're now looking to other remittance methods, which might be like faster, more reliable, may have less requirements in terms of like having to open accounts on banks, which might slow payments down. So we have that meeting of two sort of environments, the manufacturers and the resellers. Similarly, too, another thing that we think drives a lot of this is economic woes. It's very unfortunate, but for example, in Lebanon, they have extreme levels of inflation. In Egypt, it has a fairly inflated currency. Turkey, we wouldn't necessarily class as MENA, but it sort of sits right in the middle to make life difficult for all of us. I will give Turkey the benefit of the doubt and say they're part of MENA, but that also has inflation. And people historically have always looked for precious metals, perhaps, or US dollars. They're now looking at cryptocurrency because it's easier to store than gold or perhaps like physical currency to sort of do deals. And we see a lot of adoption around that too. So we started with the GCC specifically because we're here. Like, I live and work in Dubai. Like, I understand the landscape. I've been around here for a while. But we've kind of used that as a way to sort of like test and understand. It also had pretty clear regulation, right? And we also have fairly big extremes. Whereas in UAE, they're very, progressive towards regulation, and they've been very, pushing towards the innovation. Other areas are taking a more conservative approach, like, for example, Kuwait, which has an outright ban on cryptocurrencies. And for that reason, it's given us a really good comparative, right? We can look at both sides of the coin and really get to grips with, like, well, how is cryptocurrency evolving in this particular space?
Okay, great. So, I mean, the point that you made when we spoke earlier was that it's a real nexus between East and West, isn't it? And I suppose has been a historical point anyway. So nothing has changed in all of these years. I wanted to have a look to see what the outcome of our poll was, to see who's in the room. I wondered if we could just take a short break. All right, Nick, can you see that poll?
Okay, everyone's in risk, and that sort of aligns, I think, with what I'd expect. One of the other things that these country reports are sort of designed to do is you're launching a new product or service inside one of these countries or regions. Like, what would you rely on to do your risk assessment? Okay, before you start any business, you should do a risk assessment, right? You should work out like what the major threats are, what they look like. A lot of people will go to like big generic reports that talk about generic typologies that aren't necessarily focused on one specific country. But let's say I'm opening, a business inside Algeria. Like, do I understand what the specific risk vectors are in Algeria? Do my compliance team understand like what fraud looks like there, who I should look out for, what crime looks like there? Like, do I understand the typologies and the patterns? These are things that like central banks and local banks have definitely got their heads around and worked really hard on. Like, they learn from each other. But cryptocurrency exchanges, we're expecting like these teams of, in some cases, armies of staff to understand some very, very difficult local problems. And that first step of, well, what are the local problems? What do they look like? How do people buy and sell assets in this region? How do they do crime with crypto assets in the region? And it's not sufficient to say, oh, well, okay, the generic risk assessment that's generally put towards, North American and Western European focus, doesn't make sense. I can abstract that example a little bit. If we all remember, I think most of us on the call will have heard about Hydra Marketplace, right? This massive drug marketplace, one of the biggest ones that's ever been. Eclipsed only recently by a couple of other ones that have gone on. it primarily catered to Russian-speaking users. Now, we all talk about Hydra Marketplace, and we know that it had like a supply chain globally, but most of its platform was geared towards a Russian-speaking audience. That's a significant point because if we want to understand about how cryptocurrency is being used by Hydra, we're really only looking at like a smaller demographic. We're looking at maybe perhaps a Western European and Russian demographic, or a Russian-speaking demographic. We need to zoom out a bit. We need to look at the other places because they also have their own implementations of these things. What do those systems look like? How do they work? How do I detect them? How do I detect the activity from them? How can I block them from being on my platform? How can I alert law enforcement to them? And that's really where we've come from this. It's very well and good to write a long report and talk about shutting down a massive marketplace, but that's one marketplace that primarily catered to like a particular region of speakers. Like, what about all the other ones that operate? The Silk Road was very, North American, Western European focused. What about the ones that exist in Africa? What about the ones that exist in the Middle East? And really, that's how we've come to this line of work that we are now.
Okay, great. The point that you made is that the media coverage is also disproportionately Western and for the most part in English. And so some of the work that we're trying to do ourselves here is to uncover, where those regions are not covered and, put local language speakers in on the ground to be able to understand exactly what's going on. I suppose we can cover a little bit more about that as we go along, but this is obviously the project that we're trying to do, is trying to understand what is happening on the ground. Shall we get straight into the report? I have another question, another poll already. I'm poll crazy, but I've got another poll that I'd like to run by the audience, which is, which crypto-related risk do you believe poses the greatest challenge in the Gulf region today? So we can put that onto screen and you can cast your vote. And while you vote, let's just jump straight into the report, Nick, and talk about what you've uncovered so far.
The first thing I'd like to talk about then is we talked about local media coverage and why that's important for your risk monitoring. I think most of us in the KYC compliance background or space know that you need to look for negative news, but again, there's lots of regulatory news. Like, we're all monitoring Singapore, we're all monitoring VARA or ADGM or whatever else, but also in the areas of risk, they also produce things too. And what we find is by looking at crypto communities, we actually get more data perhaps, and we can find ourselves from an on-chain perspective. And a great example of this, if my screen allows me to do so, is cryptocurrency activity in Iran, right? Obviously, lots in the news at the moment, lots of people discussing, the conflict that took place for the past week and a half. But Iran has extraordinary large cryptocurrency adoption. According to a census produced by a local media or an enthusiast blog, there are around 21 million active cryptocurrency users inside Iran, which is about a quarter of the population. It's about 90 million, or a fifth of the population, sorry. Of that, the people surveyed, 89% had said that they are familiar with cryptocurrencies, and 58% had said that they had experience of investing in cryptocurrencies. But the statistic that really jumps out is that bottom one, is that 1.4% of the annual GDP of Iran may be turned over in cryptocurrency activity. That's a significant amount of money. We're talking, in the tens of billions of dollars. And again, that's data that we wouldn't necessarily find entirely on-chain, because there are lots of small peer-to-peer cash desks that operate within the country that allow people to buy and sell. If you look at the graphs to the left, again, this was taken from the report publication, you can see that the majority of purchases is done through domestic exchange. Like, where do you buy your cryptocurrency? Almost 80% of that is from a domestic exchange, and there are lots of domestic brands, Nobitex being the one that's in the press mostly at the moment. But the other thing too is they say, well, what investment options would you consider? Like, what's your primary investment sort of idea? And of the survey, they said almost half of them would invest in digital currencies as an investment sort of vehicle. This is interesting because as we've sort of learned more about the region, most of us, when we discuss cryptocurrency in the region, we talk about, fairly broad red sort of threats. We talk about terrorism financing, we talk about, sanctions avoidance or evasion, we talk about tax fraud and tax evasion. The reality is that it's a lot more complicated than just those three pillars, and you're only going to get that detail to manage risk effectively if you get information like we do, or you process that to help inform your judgment. It's a really big difference with just sort of like reading a report that's a global one without getting into that sort of details. To sort of like segue from that, then we also looked at Oman. So another thing that we've been very interested in, and I don't want to influence the poll too much, we've also looked very much at the peer-to-peer trading markets. So peer-to-peer markets are thriving, like they're all over the place. There are some operated by like really big, centralized exchanges, so like Binance, OKX. They have massive peer-to-peer marketplaces where buyers and sellers can come together and they can like direct swap with each other, right? Rather than go on a public order book, they go to each other. What we found is that these have surged over time too. So this is data we took from Oman. We took a snapshot in July 2024, and then we looked in January 2025. And you can see that between that period, the total ads, as in like the number of ads total buy and sell, had increased dramatically by January. Similarly, there an increased buy and sell proportionally by the same sort of uptake. Now, this isn't ads that are taking place within Oman. This is currency pairs with the Omani currency, right? So, like, this is a direct sort of relationship between a central bank issued currency, their sovereign currency, and also the cryptocurrency pairing, which again shows that there is a lot of activity and enthusiasm for this. Well, what does that look like in numbers? Well, on a daily basis, we have detected, and this is looking at the buy ads, we don't know how many of them were fulfilled because we can't see the proceeds of that. They're just the ones that are removed. But almost $3 million a day is done through Binance peer-to-peer in Omani currency, right? Like that's a significant amount of cash, really. The other part we look at too is in the ads, they also tell you the type of payment method that you can use. So how do I settle my account? How do I pay you? And one of the things that we've seen increasingly, particularly in the Gulf and across the MENA region, is the use of mobile payment methods. For those who aren't sort of familiar with these things, they're very, very popular across like Africa, increasingly popular across the Middle East. Things like Vodafone Pay or Etisalat, e-and money. Like there are lots of ways that people can use their mobile phone to make payments to each other, to services and to businesses. And we see a lot of these now sort of springing up in the thing there too. The other thing we see increasingly too are gift cards. People buying and selling gift cards for cryptocurrency. I guess we'll cover those in a little bit more detail in a second.
Yeah, I mean, it is interesting that these crypto ads in Oman are trading as much as almost 3 million a day. What is the risk that poses, and why should compliance teams in London, for instance, be worried about this?
Well, I think at the end of the day, there are controls in place by the exchanges on these participants, right? Like the exchanges have controls that ensure that the people who operate these platforms, like they're regulated, they have mandatory KYC for certain volumes of buying and selling. You have to get over certain thresholds. They all require the users to be identified, the buyers and the sellers. The sort of the shortfall here is that the financial institution in the middle of this, so if it's I'm sending you a bank wire or I'm using my mobile payment, I may not know that the money that I'm sending to that counterparty, that unknown counterparty, is the proceeds of a cryptocurrency sale.
Okay.
The blind spot, right? That information may not get communicated to them because, if I send you cryptocurrency, you're going to send me bank money from your bank account. The reason for the transaction, you might not tell that it's cryptocurrency. We know too that on some platforms there are currency pairs where cryptocurrency is prohibited by the state. So we know that there are some marketplaces where you can buy and sell Iraqi dinar. We know there are the same things for Kuwaiti sort of currency too. Like it's all very possible for these things to take place. And again, do the banks know about what the payments look like? I think that the exchanges will try to join that up. I'm fairly sure that they would volunteer that information if it was given to them. But it does represent an area where there is a little bit of a black, a bit of a black spot. We can't quite see what's going on. And wherever there's that kind of like lack of visibility, we tend to get a little bit nervous about what's actually happening.
Okay, so let's go back to our poll and see which our audience believed were the greatest risks. Fraud and investment scams and peer-to-peer coming in sort of like first and second place. Well, peer-to-peer first, as you pointed out.
Yeah, I felt put my thumb on the scale there. I think that's what's happened. Yeah, I think one of the things here too is like fraud and investment scams is a big one too. We can talk about, I guess, in terms of the risks in the Gulf. I agree too, is that fraud is a huge problem. And one of the things that we've seen, again, like we have lots of like big initiatives across like, Western Europe, North America about anti-fraud stuff. There are plenty of them in East Asia and in the Gulf as well about stopping this stuff. But one of the things we don't look at enough is all the fraud we come across has a local flavor, right? Like they know the words that will function correctly. It's now been supported well by, AI type tools, which can make the conversations easier for the investment scammers to go on. And we see it a lot, right? Like we see a lot of this kind of activity taking place where fraud is very tailored to its target audience. We know of specific cases that have affected users in Kuwait where they've been defrauded of like $50 million in a few sorts of like fairly large frauds. There are similar ones across all places. And another thing we see too is, particularly places where there's like high levels of inflation, is people are looking for opportunities to make money quickly. And the fraudsters know this, and they have generally a receptive audience. So wherever you have this kind of like economic hardships, there's also, these kind of parasitic fraudsters that turn up and try to take the money out of the normal people because they can use that. And cryptocurrency is often used as that kind of vehicle because it has, it's a new technology. It's not that well understood still, even though it's been around for 15 years or so. People are still not sure about what it's doing, and it's a very easy narrative to spin. Although people are getting more informed around this topic too.
I mean, the point that you make about AI and that as an enabler for fraud, I mean, that's a huge topic, right? Because what it does is it makes uncovering fraud more difficult, but also the victims are more easily duped because now it's just easier and easier for fraudsters to come across sounding really well educated, and they can do research on their target audience just like a marketeer can. And that's quite frightening actually, because the AI is really powerful in that regard. Do we want to talk about gift cards and the risk that they pose? I think you have some data on gift cards in Oman.
I think it's more of a generic thing across lots of regions that we see, but it's very prevalent in the Middle East too. So one of the things that you can do, and some exchanges offer, is you can buy a gift card. So I can go and I can buy with my debit card. I can go and buy a cryptocurrency gift card, which allows me to go to an exchange which I'm onboarded to or KYC'd, and then I can purchase cryptocurrency to the value of the card. Like that seems good. The issue is we've seen these cards being traded in like on some fairly sort of like shady and sketchy places. So gift cards do present like a particular risk for the users. Again, you still need a verified account to sign up and get it, but that initial purchase, we don't know who made that purchase, only the person who controls the account. We have that. We've also seen people in territories where cryptocurrencies are prohibited of being bought and sold, buying gift cards and then using pre KYC accounts of somebody else. So they're basically nested on somebody else's service to try and access the services. I think in a similar line too, let's talk a bit about mobile top-ups and mobile payments.
Okay.
So let's just dig into that a little bit. So I mentioned it before, but like how does this transaction flow actually work? Well, the first step is those of us who are familiar with pay-as-you-go mobile phones, you load some credit on your phone and then you can use it to like call and make whatever else in. And the advancement of that has been these services like Vodafone Pay, or Etisalat Cash, which allow you to pay bills with this credit, right? You go to a shop, you give them some cash, they give you some credit for your phone, you can then use that to pay like your expenses. It's a really, really, really useful, interesting system, like really, really nice. So what will happen in this cycle is the buyer will buy credit for their mobile using a normal payment gateway. They'll take some cash, whatever else. Then what they'll do is they will contact the seller to arrange a trade, and they've credited their phone with this wallet with some fiat currency. They now have a phone with a credit balance on it. They'll then contact the seller of cryptocurrency. However, they'll find them through social media or whatever it might be, chatting to an instant messaging platform, and they'll agree the prices and the terms. Then it's a fairly simple payment. The settlement can be between the two parties. So the seller will give them the payment address for their money to send to on their phone. The buyer will provide them a cryptocurrency wallet to be sent the money to. The seller will then remit the money back to the payer via cryptocurrency. In this case, it's Baridi because it's the Algerian system, and then the seller can get the cryptocurrency. In all that segment, there is very limited visibility on the payment, right? The only person who would know what's happened is we've sent fiat currency from one phone to another, but the purpose of that payment may not be known to the financial institution. Like it's not like buying something off an exchange with a Visa card or a MasterCard or whatever else. It's very much more of a direct kind of relationship there. And this is, again, a big vulnerability, right? Because we don't know what the purpose of that payment was. The bank might freeze a payment or ask why you sent this person money, but we don't know what they're saying to them. Only the bank has that, and they may not know the cryptocurrency use either. This is how a lot of people have been circumventing controls on purchase of cryptocurrencies. And again, we see it in lots of territories where they're either prohibited or they're heavily restricted or there's no legislation at the moment. This is how they're sort of getting around it. It's not necessarily for nefarious reasons. And I think one of the things I don't want to say here is that whenever we discuss this, it's not about, it's not about like assuming badness on the behalf of the buyer. Like we cannot automatically think, if we go back, cast our minds back to the Iran slide, the reasons why most people were looking at cryptocurrency was, as a, they want it as an investment, right? They don't want to use it for anything specific. Although I doubt they would tell us specifically if it's like, oh, I'm going to fund this max of terrorism or something like that. But it's there specifically, people are looking at for fairly legitimate reasons. The issue is that there's not a framework around that controlling what they do or allowing us to have the visibility that gives us confidence in what's going on. And I think that's where a lot of this discussion comes from.
Yeah.
But this is what fed our country reports, right? Like we wouldn't have known about this method unless we sat down and really looked at how to buy and sell cryptocurrency in these different countries and looking for patterns and trends. And that really is, important, because now if I'm, working at Etisalat Cash or Vodafone Pay, I now need to look out for transactions that might be related to cryptocurrency. How can I do that? What sort of controls am I put in place? Or do I have a field to say, this is the process of a cryptocurrency payment? What's the destination wallet address? And give me some information which will help me manage that risk.
I think what's interesting for me is that what you're uncovering is user behavior that's driven by obviously a situation in whatever territory it is. And anecdotally, I know that in South Africa, using your mobile phone to make purchases is a very common method, and it's primarily because a lot of people don't have bank accounts. So they use mobiles to make these micro payments globally and to move money around. So it serves a much needed requirement is to be able to let these people live and make purchases. I've been saying that, having a look at the situation that is on the ground, I think what feeds that as well is the regulatory frameworks, right? So let's go back and have a look at what's happening in the Middle East again, in terms of the regulatory frameworks are in place, with variances. And what does this impact have? So I know we don't really want to go into the nuts and the bolts of the actual regulations like clause 1.1, but what we do want to understand is how this is affecting user behavior. So where there is a ban, what does this mean? And where there is a framework in place, what does this mean? So do you want to take it from there, Nick?
Yeah, absolutely. So one of the things that we noticed, and I think like we talked earlier about like the difference between Kuwait and the UAE, for example, in terms of cryptocurrency. In UAE, the creation of VARA, the regulatory frameworks, the things that have been put together have been very much like considered early on, and I think they're taking a more risk-on approach, right? They're almost in the sense of we are confident enough in our ability to detect and manage this risk. We're going to look at this very carefully, and we're going to allow this space to grow. Production of things like sandboxes. I think Sama has one like that in Saudi Arabia. But the development of these frameworks are really interesting, as in they've started off and said, right, how can we do this? Let's put something down and let's work out how we can work with cryptocurrencies. And as a result of that, we see a lot of businesses have set up shop in Dubai and Abu Dhabi because there's clarity. Like there's very clear rules what you have to do. Like VARA has a very thorough rule book. You're told what you can, what you can't do, what license you need, what you're supposed to employ, even down to things like your information security policies and measures. Like they're very, very prescriptive, which is in many ways I think many compliance officers like that, because when you're sort of discussing things with your leadership team perhaps, and it's like, okay, well, do we really need to do this? Well, if it's written on a piece of paper, then it's not a joke. You have to do it, right? Like always nice when you have that level of support from a regulator. Obviously, that comes with other things too, and it obviously helps out the exchanges with their own other relationships, perhaps with other financial institutions. Like it makes them easier to deal with, like maybe banks or other businesses too, which again, it's allowed them to sort of flourish. Kuwait, on the other hand, has taken a slightly more conservative approach, and I think it's more in a wait and see sort of perspective. And I think this is the right way to go. If you as a supervisor or regulator look at a product and say, we don't know enough about this yet to do something with it, and you take more of a cautious approach and you say, okay, we're going to restrict it for now, we're going to keep watching it, and then at some point in the future, maybe we'll look at it again and decide whether or not we want to go forward. That's a very sensible way to operate, particularly if you've got to, you're not confident in how the market's going to work. And I think a lot of the states will look at what happens perhaps in Dubai, what happens in other territories too, to see, okay, how does this fit within our framework? I think, regulation is inevitable in most places. I think the issue is where we've seen outright bans in other territories where they've been very staunch against any sort of cryptocurrency business setting up, they generally are missing an opportunity to enforce against, so they can't fine. They can, you can send someone to prison, but that doesn't stop the activity from taking place. You need to be able to view it and control it to a certain extent. And even more cynically, once you've got sight on what's going on, you're then able to tax it, right? Like you can charge costs for licensing, you can develop jobs, they need real estate, they need offices, you can devise a whole framework that sort of supports your economy too and allows this to take place. And again, it's there for the taking. We've heard in other countries too, where they were staunchly opposed for a very, very long time to any sort of even consideration around cryptocurrency. I'll use Pakistan, not a MENA example. Pakistan, for example, have done a complete U-turn on their cryptocurrency policy in the past 6 to 8 months. They've decided, okay, actually, we do want to be part of this now when they've got people coming over to professionally advise them their frameworks. Again, in the initial sort of phases, I really understand where regulators were and what governments were thinking, which is there's a lot of hype and noise around this, and there's a lot of scams that were happening, and we remember all the days of the ICO frauds and rug pulls and things like that. I think the regulators and the governments have woken up and said, actually, there is a viable product in this. We don't want to be left out. Let's get involved in it, but let's also take our time and see what works, because not everyone, is going to arrive at the same conclusion straight away. And I think, one of the pieces of advice we've always given to regulators when we've spoken to them is Jordan, for example, is another one that's recently announced legislation on cryptocurrencies. One of the ones that we've advised, and when we say this is you can go for an outright ban, you can make it prohibited and illegal, but you can't arrest your way out of the problem. It's going to keep happening. And as we see with this example of, the mobile payments thing, there's always a way, there's always a way around these problems. So it's very, it's very important to sort of take not a risk-on approach. You can be conservative in your risk management, but you can also sort of come up with a framework to do it and see what works. I think specifically to Vara, they did a lot of thinking about it. They brought together some really smart people to come up with how to make this all work and to set all the pieces together and work out what's going on. But in still many ways, they're still finding what works and what doesn't work, right? They're still experimenting. They're not going to call it a day and say, right, that's the rule book, we're done. They're going to continue evolving what they've done too. And I guess the question is, at what point do others take what they've done or look at what they've done or draw inspiration and say, right, we're going to implant this thing and then we're going to move forward from that?
Yeah, so I guess you're going to have the leaders and the followers to see what works best, but it's not going to stop user behavior or people circumventing what is in place already. And I mean, to me, it's like being on a Monopoly board or something with your family. The rules of the game have to be explained so that you all know how to play nicely. But the fact of the matter is that even if the rules are explained, some people are going to cheat. As it happens in my family anyway. But the key thing here is that that behaviors are evolving anyway. So with whether there is regulation or not, and it's really important to keep a firm eye on these regions because of the new and evolving methods and cunningness, really.
Yeah, absolutely. And one of the things I think I just want to drill down a bit in terms of other things. So there are some really well-established informal value transfer systems, IVTS, in this region, right? So people move money in parts of South Asia and across the Middle East using Hawala, right? And people who are on the call probably know what Hawala is, but it's basically a method of moving money around without it actually moving from the country. There's a similar systems that have been described by others, but Hawala's there. One of the things that we are expecting to see or are seeing is like Hawala's now looking at cryptocurrency as well as an opportunity for themselves, right? Moving away from the traditional system. Now, there are two ways to look at this. Like, you might look at this as like the alarm bells should start ringing and, oh my God, Hawalas are now using crypto, everything's gone to crap, what are we going to do? The reality is a progressive regulator could look at this and say, we can't stop them because we can ban the apps from our app store, but we can't place every single device in the country. Like it's too much to try and do as a lift. Okay, we need to supervise them. We need to see what they're doing. We need to give them access to blockchain intelligence tools. We need to inspect them to do whatever else, just as they've been now expected to do KYC, just as now expected to register with governments and provide suspicious transaction reports as they're obligated to under many national frameworks. It's just an evolution, right? Like, rather than sort of close these guys down and throw them out and say, oh, it's all gone horrible. It's okay, well, how do we actually deal with this problem? Rather than trying to like cut it all off, which in this case is just not going to work. How do we monitor it? How do we enforce against it? How do we tax it? And I think that's the key point I say too here is, and I go back to it, if you are banning something outright, there is no commercial upside to you. You can set up, a specialized team in an FIU, and even if you do ban it, you still have to deal with the enforcement side, right? You still have to be able to know how to do this. Even if I ban cryptocurrency tomorrow, like say I'm the Iraqi police, I'm still going to have people come to me and say that I had cryptocurrency stolen from me. I'm still going to have criminals within my country trading with cryptocurrency, and that's going to be part of my investigations. Like now, admittedly, you could say all the charges they use cryptocurrency and that's illegal, and maybe I can get them on that one too. And that's an open framework for you. But you still need to know how to investigate it. Can you still find all the other participants in that space? So yeah, you can't ignore it, unfortunately.
No, it opens up it's like a can of worms, doesn't it? Because the minute you talk about regulation, obviously you've got all the corollary. You've got enforcement, you've got resources, you've got training, you've got technology, you've got skill, and all of those things needed to be considered very carefully. And I guess, I mean, we aren't talking about the UK at the moment, but I am in London, so I may as well say the hesitant approach and the caution with which this country is proceeding is well, it's causing frustration, but I guess they have their reasons. But we're not here to talk about the UK. So I want to flip back over to the last poll for the day, which was how prepared are crypto platforms operating in the Gulf to detect and mitigate emerging risks. So we can pop that one up and see what people have to say about that. But while they are filling out that poll, why don't we flip over and talk about how the Gulf compares with other crypto active regions we've studied? Because obviously this report is based on MENA, but in the meantime, you and your team are doing masses of work in all sorts of other territories and regions, uncovering all sorts of juicy information. So what can you tell us about how the Gulf region compares with other regions you're looking at?
So we structured our work in terms of the World Bank's regions. So Sub-Saharan Africa, MENA, Europe, APAC, North America, South America, LATAM. There is a problem with APAC. APAC is an area where we've spent a lot of effort and time. I mean, for our perspective, it felt like a natural focus to sort of go and look at APAC next. And again, if I go back to what we said right at the start, there is a world of information out. If somebody at the SEC sneezes on a document that says cryptocurrency on it, it's hit the media 20 minutes later. Do you know what I mean? Like, I think most people who've been anywhere near, like, particularly the US financial press, Jerome Powell's heartbeat is monitored, I think, by CNN. Like, they know everything that's going on the whole time. Gary Gensler being another guy who they've sort of watched forever. We all know what's going on. And again, like we know what's going on, but also we know the confusion that's happening. That's the other thing too. So Crystal, we thought, well, we're not really going to do you many favors by reporting on something that you're all pretty familiar with. Let's go look at something that we don't know much about, and let's go and establish some understanding there. So we started in the Gulf, as you said, and now we're looking at more at the APAC region. APAC is a problem because you're looking at, everything from like, South Asia all the way through to East Asia, and there is it's not a homogenous area. Like there are so many languages spoken, there are so many countries, There are so many cultures, they're so different that it's really painstaking to go through each area and find out this information. And even within countries, like there are multiple languages spoken, it becomes a colossal task. But that's where we're really digging into now, because just as the MENA region specifically, the Gulf states, Dubai and Saudi and Bahrain, Oman, like have a lot of international meeting places, like lots of people come here for trade. We also know that lots of people travel around Asia for the same reasons, right? Lots of people go to Malaysia, Kuala Lumpur to do business. Lots of people go to Hong Kong. Lots of people go to Singapore to sort of do their interactions. And also a lot of the expats communities that operate within the Middle East, Africa, and the rest of the world come from South Asia or East Asia. Again, we want to see those touch points because we're aware of what's happening in the other regions, but now we need to look at, well, what's going on back there too, because that also has a fairly big impact on the changes. So we are looking now in more detail at the Asia Pacific region. We've got some decent reports put together from, Japan, the Republic of Korea, Indonesia, Malaysia. We've produced plenty of research work on it now in detail, and I think that would be our next kind of like big thing. But I will say our experience of researchers has said, we speak a lot of languages in our team. It's funny that amongst the team we have most of the world's languages spoken, or the major world's languages spoken. But you go to APAC and you need 400 more languages before you even get started. You need Vietnamese, you need Thai, you need Khmer, you need Tagalog, you need Malay, you need and you kind of sort of like wing it with Chinese English or Hindi or Urdu. You need everything. So that is a challenge. But what we find are similar kind of stories to what we see in MENA, which is these informal networks that have sprung up to support cryptocurrencies. Another thing as well that we also see a lot, like regionally between commonalities between the two places, is cryptocurrency for tourism. Like people who are going on holiday, they want to bring a currency that's got a decent value. It's going to be competitive against the local currency. Usually would bring like cash dollars. Bringing like bags of money with you is generally felt unsafe. So having it in cryptocurrency means I can go into a shop, I can swap my cryptocurrency for some local currency, and I can have a good life and enjoy my holidays.
It springs to mind another topic that I was discussing earlier this morning is crypto ATMs. So when tourists arrive in APAC or in an Asian country, is that how they would exchange crypto, or would they be able to buy and sell in crypto?
It's complicated. It depends where you go. Like each country has a different sort of take on it in APAC. ATMs are very popular. If you go to Hong Kong, for example, there are hundreds of ATMs and they're literally everywhere. Like shopping centers, street corners, you can find a crypto ATM. Many of them ask for identity documents and information, which is all good and proper. In other regions, though, where there's less sort of supervision, perhaps, maybe the regulation's there, but the supervision's not, we do see a lot of these crypto cash services. So, for example, if you are in parts of Cambodia or perhaps other sort of territories, there are the options to buy cryptocurrency in person with someone, like you would do with a normal Forex transaction. Like if you go to the shop and the Bureau de Change or whatever else, you pay for it there. In some places, this is illegal, and the governments are heavily clamping down on enforcing it. Certainly against physical premises, the Thai authorities did a raid against a series of them 6 weeks ago, I think, and shut down a whole load of them that they found or they had alleged to have been involved in, supporting online fraud. But other ones now are kind of maturing, and they're now sort of almost do like home delivery or going to hotels and things like that to try and like keep up with what the regulators are doing. And this kind of just goes back to the idea of like you can't just enforce your way out of the problem. You need to think about the regulation side. They're going to do this. Okay, how do you tackle this? If you outlaw it completely, you're going to create a huge amount of work for your police force. Can we supervise what they're doing? They're not all bad. And that's the other thing, right? These guys aren't all bad. If we shut down every single Western Union branch in the whole world because one of them was bad, like there'll be a whole sorts of problems, and that's not a feasible thing to do. But by having lots of them open and setting a common standard and monitoring them and having them supervised locally, you are able to have a lot more visibility in what goes on, and maybe you have an opportunity to enforce and get a better outcome. And I look at this problem as a different one. It's like sometimes it's not about the ability to prevent something. Sometimes the ability to collect the data in the first place. Like when someone does an investigation, what do? We say trace to a service provider and ask for KYC information. The worry at the moment is everything goes to one of these cash desks and there's no KYC information provided. My argument would be is, well, if they were obliged to do that and they were forced to do it and there were heavy penalties for them not doing that, and they had monitoring tools too, maybe we would get the information to help you with your investigations. Maybe there would be a way to close more of these cases, and sort of like separate the good ones from the bad ones. Again, once you've criminalized a certain activity, once we've instructed all banks to do KYC mandatory, once we've asked them to all monitor transactions, then we'd be good to go. Oh, okay.
Yeah, so the results of the poll, you take it on, Nick.
Well, that's interesting, isn't it? Well, if you're feeling if they're minimally prepared, and if there are members from crypto platforms operating in the Gulf, please come and speak to us so that we can help you be more prepared than perhaps what you are at the moment. The report we've produced is it is a watered down version of what we have. We do have specific reports for specific territories and countries. We can also engage in specific research that too. And I think, when people say they're somewhat prepared, I think that's true. And where you have gaps, we'd love to hear them. We'd love to know what they are and see how we can help you address them. I know like a lot of focus on risk assessments is primarily geared around AML, money laundering vectors that relate to foreign cases. Right, I'm the same too. Like I still go through FATF typology reports. I still look at every UN publication I can. I still try and go through that data because that's useful to me, but it's contributed from different countries. What we try to do at Crystal is like look in a specific region or a specific area and provide some additional clarity on what's actually going on there. So if you're feeling minimally prepared, then please approach us. And if you're not sure, it depends on the country where you have gaps. That's what we exist at Crystal to do, to try and help you fill those gaps. From an ongoing perspective, like we have some excellent coverage of the region because we've had to look so deeply at it. And that's really something we're quite happy to sort of like talk about. But if you really want to understand what else is there, and again, it's not sufficient for me to say, oh, there are loads of cash desks. Who's using them? How are they used? Where are they located? What are their phone numbers? What is their Instagram pages? Or what are they? Where are they soliciting their services? What does the peer-to-peer services look like? What currencies are they supporting? We can really get you into the weeds of that kind of data. And even from things like localized frauds. We can look at like who are those people? Because again, another thing as well to look at is particularly in territories where they feel is underreporting of things now, and that has changed a bit with recent sort of developments in like crypto fraud and people paying more attention to it. We tend to see is that people will commit some pretty horrific frauds in one country and then reinvent themselves in another country, all the money that they've stolen as a crypto sort of business, and suddenly they're walking with their head held high again. And from our perspective, we want to try and help you detect those guys. We don't want them anywhere near our ecosystem. Like you can't just go and rob a load of people thinking that the local press can't deal with you, that the local law enforcement is not going to touch you. We want to make sure that as a counterparty they are.
I think that's a really important point, and maybe we glossed over it initially, was the global nature of cryptocurrencies. And if you're an exchange, you need to have a really global view of risk. Doesn't matter where you're based and where you're trading, because crypto is borderless, right? So I suppose, I mean, I'm saying something that everyone knows, but just to reinforce the point is that the risk is all over. I just wanted to have a look at the questions quickly. Only one has come through actually, and that's asking about what exactly Iranians are investing in crypto. Would you like to cover that? I mean, we do have quite a lot of reporting on Iran on our website and blog, but Nick, the question is, are there details of what exactly are Iranians investing in crypto?
Yeah, I mean, so thank you for your question, Marwan. Very kind of you. Like we could dig into Iran into lots of details, but my honest recommendation is look at the Farsi language media and Google Translate's your friend. Ars Digital and Mihan Blockchain are both two like Farsi language publications. Ars Digital specifically published a report every year about cryptocurrency use just before the Persian New Year, Nowruz. And they'll do that when they talk about what they're investing in specifically, like why they're doing it. What we tend to see them do is go for stable tokens, so USD paired tokens, for example, or Bitcoin. It's actually a running joke in Iran that if you buy Bitcoin, you win twice, because Bitcoin might appreciate in value, and the value of the Iranian rial or tamen, because it's deflated, so inflated now. You win twice basically. So a lot of them are using it for that reason. Also, there's a huge Iranian diaspora. Like lots of people are outside of Iran, not just the people in the country, and they want a mechanism to send money back to their families. And again, trying to find ways to send that in a way that goes to the people who are their family members, rather than sending it, through a bank that's probably going to block a payment or things like that, is also an option that we see doing it too. It's a really complicated landscape, and it's a very complicated country, I guess, to try and describe like its relationship between the people and its government. And again, certainly in like the past, 2 week and a half, we've seen lots and lots of people shedding lights on this particular place, but it's a very, very complicated relationship between the two places. From my own understanding too is, sorry, not from my understanding, but like we did a recording with my colleague Rajat Halawat about Iran, and one of the things that we talked about in that podcast, that recording, was the Iranian central government is concerned about cryptocurrency to the point where they shut down the payment gateway that exchanges use, Shaparak. They shut it down to cryptocurrency exchanges. They wouldn't allow you to buy or sell cryptocurrency exchanges using your personal debit card inside the country. Like that's a significant sort of step, right? Because that shows that the government's concerned about this undermining economic policy, and it's damaging their economy to the point where everyone's putting money into this. And again, it's very much how it's used. But if your currency is terrible, and like it's devaluing the whole time, then this is an opportunity for you as an individual to find something that's maybe a bit more stable, that you can buy stuff, and sell stuff. And again, if you're a family member, I want to send money back to a family member somewhere, this might be a more productive way for me to do that, and they'll get the value of what I've sent them rather than lose out on some hideous Forex kind of conversion stuff.
Marwan, if you want more content on Iran, please visit our YouTube channel and you can see the video that Nick was talking about, as well as on our blog. We do have some blogs. I just wanted to ask Nick one last question before we wrap up. And if there was one takeaway for today's audience, what should it be? And my prompt is, do you have any words of wisdom?
Do I have any words of wisdom? Oh my goodness me. That's a tricky one. I do, and Marwan, I just maybe we can take the thing on. You can get me on LinkedIn, and I'll answer your questions there, because unfortunately we're out of time. But I'm more than happy to answer these questions. But if you have any other questions, like you can just reach out directly to me. I can talk forever about this region. I love it. In terms of the takeaway, though, the one takeaway I'd say is that, and I think maybe it's the phrase I've used at the start of this presentation. Cryptocurrency is a global product, but it has a national flavor, right? Like there is an individual way of cryptocurrencies used and whatever else. I've heard similar sort of things about like religion and other stuff, like people have said like, oh, there's a global religion, but like there's a national, or a local version of how that's practiced, how we have different sects of, perhaps like, Christianity or Islam or whatever other faiths there are. Like everyone has their own different ways of working based on where they're in that environment. And we need to take the same approach for cryptocurrency. When you're looking at it as a global sort of phenomenon, yes, it's a global product. Yes, it's used all around the world. Yes, it's in many countries, all of the countries. Wherever there's an internet connection, you can get cryptocurrency, basically. The reality on the ground is that it's used in different ways by mostly the same groups of people, but different ways. It's bought and sold in different ways, and that presents you different risks. So really, if you're operating in those territories, or you've got plans to go there or do whatever else, I would strongly suggest, one, you can come and talk to us, and we'd love to talk to you about like what we've seen in different countries and how it all works. But two, make sure you understand what's going on there. It's not sufficient, I think, now to say that, okay, well, we don't know enough about that country, but you're offering a product and service there. You're onboarding customers. You're receiving potentially millions of dollars, equivalent value of cryptocurrency into your accounts, like from that, and you don't understand enough about the region. That's not sufficient. Like you wouldn't. We have turned around and said that we can do better than what the traditional finance institutions are doing. We need to be making progress in this direction, and it's an opportunity to do that. However, I also aware that compliance teams are limited in their size, and investigators are limited by the amount of exposure they have to different cases. You need somewhere to come and refer back to, and we would love to help you be that archive and be that touch point. Again, we're Crystal Intelligence. We're not just looking at a forensic tool which can help you with your transaction monitoring, your stuff. We want to give you advice too. We want to give you information that helps you make decisions.
Yeah, thanks, Nick. I think for me, what I realized today, for us to crack this financial crime nut, it's clear that we need a holistic view of behaviors and motivation, and that includes, everything that we can find anywhere, dig up on-chain, off-chain data, and then you really have a good and clear picture. There's one more thing that I want to plug, and that is just coming back to the Australia landscape. For those of you who are interested in that region, we will be running another webinar focusing on ATMs and the crypto risk in Australia. We will be posting details about that shortly. So if you're interested in that region, do sign up and listen to us chat about Australia then. Otherwise, I want to say a huge big thanks to Nick for his time. I think he's shared a lot of really useful insights today, and I want to thank every one of the members of the audience for joining. Recordings will be sent out shortly in case you didn't catch everything. So thank you so much, everyone. Have a great day.
Thanks, everyone.